Okay, good evening, everyone, and welcome back. It's been a while since we've done a presentation here. So, what I wanted to cover tonight was just a couple of basics on, getting back into trading if you've taken a break or if you've been away for a while for whatever reason. I want to talk about some new developments and how we've been trading the squeeze system, and we'll talk a little bit about some spreads. So, just the basic mechanics of debit spreads and credit spreads, what they are, etc., where to model them, and then of course, as always, we'll talk a little bit about the psychological aspect of trading, which is pretty much the most important thing in my opinion. So, without further ado, let's go ahead and dive right into it. So, when you've been away from the markets for a while, it's really important that you get yourself back into the proper trading mindset. Okay. It's a great opportunity for you to start fresh and do things the right way from the beginning. Okay. Fixing mistakes is one of the best ways to improve your trading results. And so it's really important that, as you're getting yourself back into it, it's almost as if it's a fresh start, right? You've got a clean slate. The water has kind of settled for a little bit. All the dust is settled to the bottom, and now you can see things clearly. So what I would suggest first and foremost, three of the best books out there with regards to trading. So Trading in the Zone by Mark Douglas, Best Loser Wins by Tom Hugard, and Mastering the Trade by John Carter. I highly recommend going through these on a regular basis, even if you are trading on a regular basis. I've gone through these books dozens of times. In fact, I remember at one point, there was one chapter in Trading in the Zone that I listened to like 10 times in a row, just on repeat. Mastering the Trade, same thing. Those first couple of chapters where he tells his story, I think he calls it the Minnesota Stupid story. And, if you haven't listened to it, listen to it. It really describes, the stages that we go through as traders. And Best Loser Wins, if you haven't heard about this, absolutely phenomenal book. Worth their weight in gold. And then, of course, once you've gotten yourself back into the proper mindset, remember that this is something that you have to feed on a regular basis. Okay. Staying focused, staying disciplined, staying positive, believing in yourself. Um, you know, it's really important to have that proper mindset as a trader, because once you start spiraling out of control, things can go bad really fast. Okay. So then next, what do? Your trading plan, right? Update your trading plan, update your trading rules. So your trading plan is pretty much your mission statement, right? Like, what are you doing? Why are you doing it? Etc. If you don't have a trading plan, then you really need to take a step back and ask yourself how serious you are about this business. It's not just as simple as, hey, I think this is going to go up, you know, let's buy calls or let's buy stock or whatever. You really have to have a very well thought out process, right? If you've worked with me in the past, you know that there's a template that I share, and go through it. Make sure that all of those things are as up to date as possible. Most traders that I know review their trading plans and update them at least at a minimum on a yearly basis. Okay. What's going to be your focus for this year? Is there anything that you're going to change? Always revisiting your trading plan keeps you fresh. You should have it printed out on your desk, or, have a PDF copy that you look at on a regular basis, whatever the case might be. But it also has really important things in it. One of the most important things, and I don't want to get into this in too great a detail right now, is what do you do in case of emergency, right? I don't know how many of you have ever been in a situation where the power goes out and you're in a trade, the internet goes out, your phone dies if you're trading from it, your computer burns out. Like I've had situations where I've been in trades where the power has gone out. I've been in trades where the internet has gone out. I live in Canada, and it was last year, or the year before. It was July, and we had an entire, it felt like a whole day where we had no internet access. And so imagine you're in a trade, especially if you're trading, futures, maybe you're not disciplined, maybe you don't trade with a stop, like things can go bad really fast, right? Don't necessarily assume that everything is always going to work because it always does, because all it takes is that one time when it doesn't. For those of you that know my Amazon horror story where I had a stop loss in place and the system didn't trigger it, and how I ended up, in a pretty nasty situation, you always want to make sure that you have all of those contingencies in place, right? It should already be written out, planned out, and you should know exactly what to do. Because at that point, you don't want to start trying to figure out what to do. You should already know what to do. And one of the most important things about your trading plan is that you need to have a repeatable process, right? If you have a repeatable process, you can have a predictable outcome, right? Most of the trades that many of us take are based on the TTM squeeze. Some of us trade credit spreads as well, which we'll talk about a little bit. But it's doing the same thing over and over again. Okay, that's what's really important. So your trading rules. If you don't have trading rules, you need to have some, right? So either you don't have rules, you don't follow your rules, or your rules suck and you need to update them, right? And I'll quote Dr. Van Tharp, the late, great Dr. Van Tharp. He said, if you don't have rules, everything you do is a mistake. And so we really need to ask ourselves if we have rules in place, and if we don't, why we don't. And if we do we follow them? And if we don't, why don't we follow them? Because if you're not going to be disciplined as a trader, you're not going to make it. So, how do I analyze the markets? And so if you've taken a break from trading, this is a great way to get yourself kind of back in touch with the market or in tune with the market. I prefer a top-down approach, right? What works for me might not work for you. But this is how I do it. This is how I've done it for some time. And I have found, reasonable success doing it. I prefer the top-down approach, and I found that it's much easier to trade with the trend than against it, okay? While occasionally I will take a reversion to the mean trade, 90% of my trades follow a very specific setup. So what I first start looking at is the direction of the markets, and then I'm trying to find trades that are in line with that. If you're in a river, does it make sense to be paddling in the opposite direction as the river? You're not going to be able to do that for very long, right? Always go with the flow. But the institutions, they control the markets, right? Because they're trading billions, hundreds of billions of dollars. And if the market is going to go higher, you want to make sure that you're on the same side as the market, right? For those of you that know, and I've got a screenshot of it, which I'll show you at the end, I literally have a printout beside my desk here that says the market doesn't give a damn what you think. And it's a constant reminder to me that I always need to make sure that I'm on the same side as the market, right? Now, don't get me wrong, I do take reversion to the mean trades, but it's a pretty specific setup. Like I'm looking for something in order to be able to justify taking that trade. And of course, I've got rules that I have to follow with regards to getting in and getting out. So first, what's happening with the market? Next, I look at the different sectors to see where the money is flowing, right? So you got your XLE, your XLK, XLP, so on and so forth, right? For those of you that are in the group, I've shared my watch list. You can copy that watch list. You can add to it, take from it. Do whatever works best for you. That's what you're always going to hear me say. Do what works best for you and your account, right? So start with the market. What's the overall market doing? So I look at the S&P, I look at the NASDAQ, I look at IWM, the Russell 2000, I look at the Dow, and then I have an idea of which direction the market is going. From there, I look at the different sectors, right? We want to be buying strength, we want to be selling weakness. And then I'm looking for names within that sector, right? So I'm looking for squeezes, right? The TTM Squeeze by John Carter. And it has to be based on my checklist. So it has to meet those criteria that we're looking for. So next, knowing what you want to trade. So what kind of instruments do you want to trade? Do you want to trade stock? If you want to trade stock, what kind? You want to trade small caps, mega caps? You want to follow Investors Business Daily, right? William O'Neill, God rest his soul. You need to decide. Are you going to trade options? If you're trading options, are you a directional trader, right? Are you trading spreads? If you're trading spreads, what kind of spreads, right? Are you trading futures? Are you trading Forex? Are you trading crypto? Are you a trend follower? Most of the successful traders I know over the years are trend followers. I remember it was Jim Ropel. He said something once, and he's like, if you can catch a few of these true market leaders, it can take you from first class to private jet, right? And so, being on the same side as the market, especially when it's trending, can do very well for your account and for your life, okay? I haven't met very many, actually, I don't think I've ever met a rich counter trend trader. Doesn't mean they don't exist. I'm just saying that there are more successful trend followers than non-trend followers, okay? And if you've been trading for a while, understand that it's going to take some time for you to figure out what works best for you. And remember, what works best for me might not necessarily work best for you, okay? We have different time horizons, we have different account sizes, we have different personalities, we have different approaches to the market, and all of that factors in. So what works for me might not work for you, just as much as, what works for you might not work for me. An important part of the process is figuring out what works best for you, okay? Once you figure that out, trading becomes easier. It's never easy. It just gets easier. Okay? So next, know when you want to trade. So what does your current schedule allow, right? Do you work full-time? Do you work part-time? Is this all you want to do? Ask yourself when you trade best. And if you're not sure, then go back and look at your trade journal for your previous trades. And if you don't have a trade journal, ask yourself, how are you supposed to know what's working for you and what's not? Okay. I promise you that you will not make it as a trader if you don't put in the work. Okay. You might get lucky. A lot of people got lucky in 2020. Most of them lost all of their money in 2022. Because if you're in, one of those times where the Fed is just pumping money into the system and, you buy on Monday, and if you're down on Tuesday, by Wednesday or Thursday, you're profitable again, that was easy money. And it doesn't take a whole lot of skill to make money in a bull market, just like how it doesn't take a whole lot of skill to make money in a bear market. You just need to make sure that you're on the right side and that you're not making mistakes over and over and over again, right? Linda Raschke, one of the best technical analysts out there, had something that stuck with me. And she said, you know what? Fix mistakes right away. Because if you can eliminate those mistakes, your trading will improve significantly, okay? I've seen, people make lots of money. I saw it before the financial crisis. I saw what happened during the financial crisis and after. I remember the tech wreck. I remember how, the market went down for quite some time. And then when it started to rally, it was incredible, right? But you have to know what works for you. And so you have to know how you want to trade. Do you want to be a swing trader? Do you want to be a day trader? What's your best time frame? The only way you're going to find out what your best time frame is to track your trades, review them, journal, right? If you don't put in that work, you're not going to make it. So what other commitments do you have, right? Ask yourself, where does trading fall in to your life's priorities, right? I've worked with a lot of people over the years, people from all over the world. And the ones that are successful have very common traits, okay? They put in the work, they're teachable and coachable, they're willing to give up the things that they're doing to become successful. if you continuously chase trades, if you don't stop chasing trades, guess what's going to happen? You're going to keep making that same mistake over and over again. And you're going to keep grinding away at your account until there's nothing left. Okay. So do yourself a favor, put in that time, put in that effort. The time and effort that you take outside of trading hours is what's really going to help you during those trading hours. Okay. So if you're a full-time employee or you run a business or you travel a lot, maybe you need to find something that's going to work best for you, right? And so if you're a swing trader, are you going to be trading the monthly chart? Are you going to be trading the weekly chart? Are you going to be trading the daily chart? And, I'll tell you this because I've been there myself and I do my best not to fall into this. But if you're trading a monthly setup or a weekly setup or a daily setup, you have no business on a 5-minute chart or a 1-minute chart or a tick chart watching every single movement of the price action. Okay. If you're trading on a daily chart, focus your attention on the daily chart. The 5-minute chart is doing nothing for you except leading you astray. Okay. Know your time frames. Now, if you're a day trader, what time frames are you trading? Are you trading the 78-minute chart? Are you trading the 30-minute chart, the 15-minute chart? Maybe you want to trade the 5-minute chart. If it works for you, do it. Right? And just remember though, that day trading doesn't mean trading all day. Most of the professionals that I know will take a few trades a day if it meets their criteria and then go off and do something else, right? Everybody has this idea of, successful day traders and, they're trading from their laptop on the beach in the Bahamas because they flew there on a private jet and, all that kind of stuff. I can tell you this, most full-time day traders are, they've got high blood pressure, they're overweight, they've got back problems and sciatica, high blood pressure. It's not something that you want to do, sit there in front of the screen all day because you've got, your financial capital. You've also got your physical and mental and emotional capital. That's also really important, right? So focus on those things. Make sure that, the market isn't taking over your life because believe me, the market will even take your soul if you let it. I'm not even kidding. Okay. Don't give your life to the market. See the market for what it is, right? If you grew up close to the ocean or close to a lake or a river, you have a respect for that water, right? People who live on the coast know that they can go into the water and they can catch fish, but do you want to spend all day there? You probably don't because it can be dangerous. So, use it for what you need it for. The market is an ocean. There's always fish there. You can always find an opportunity, but realize that, you're not going to become a millionaire overnight. And, even if you do, congratulations. But remember, you want to look at it as the long game. Okay. Don't think about the next trade. Think about the next 1,000 trades and ask yourself if the way you're trading right now will allow you to meet your goals and objectives. And if it's not, then make the necessary refinements. Because if you keep making the same mistake over and over again, then that's literally the definition of insanity. Doing the same thing over and over again, expecting a different result, right? You need to be disciplined. You need to be patient. You need to be organized, right? All of the people who I've seen find success when I work with them, they all do the same thing, right? They're all tracking their trades. They're journaling. They know what trades are working for them, what trades are not working for them. They go back and they review their trades and they can look at it and say, I know what I did wrong. And I know how to fix that. Okay. Take it seriously. And so next, ask yourself which strategy that you want to use. What is your outlook? Are you bullish? Are you bearish? Are you neutral? Right? Don't let the perma bears out there convince you that the market is going to crash. day in and day out and we're going to zero, it's not going to happen. Okay. I've been through numerous once in a lifetime scenarios. Okay. Sure, the market could crash. The market's not going to zero. If the market goes to zero, we have much bigger problems to worry about than the market. Okay. Now, how confident are you in your outlook? Right? A big part of trading is knowing what works and when it works and how well you can execute on that. Right? I've traded all kinds of systems over the years. And I have found that for me personally, trading the TTM Squeeze setup, buying when there's compression, close to the 21 EMA, selling at +2, +3 ATR, and we'll talk about some refinements that we've got to that as well. I find that works for me. And I don't need to, sit there on the 1-minute chart and look for targets. I know exactly what I'm looking for. I know what works for me. I know the recipe works. And so I'm just going to continue doing that. Doesn't mean that that's the right way to trade. Doesn't mean that there aren't other ways that might make me more money or work better. It just means that for me personally, this is the approach that works. If it doesn't work for you, find something that does. Always do what's best for you and your account, right? So ask yourself when you're taking a trade, and this, of course, should be part of your trading plan, how much money are you willing to risk? And what if you're kind of wrong on your trade? And what if you're really wrong on your trade? Right? Are you willing to accept the outcome? And this is something that, it comes with maturity as a trader. If you're not willing to accept the outcome of your trade, you shouldn't be trading. It's nobody's fault but your own. If you took a trade and it goes against you and you don't cut it, it's not the market's fault, it's your fault. I know a lot of people need to hear this. The market cannot be controlled, okay? Just like you can't control the waves, you can't control the tide, you can't control the market. But if you adjust your sails, you can get to where you need to be. So make sure that you're finding a strategy that works under the current market conditions, right? If the market is going down, does it make sense to just keep buying calls on anything because you think the market has to go up? The market doesn't care what we think. Always position yourself. The highest probability trades are always in the direction of the underlying market trend. If things are going up, look for long setups. If things are going down, look for short setups. Buy strength, sell weakness. Don't make it more complicated than it already is. Okay. So now we talked about the TTM Squeeze. I'm not going to go into it, in great detail right now. For those of you that are in the group, you already know the setup. If you don't know the setup, watch my YouTube video. There's a couple of them there. Go through it. If you have questions and you're in the group, feel free to reach out. If I can't answer you right away, then, somebody else probably can, right? But we all sort of trade the same thing. So keys to a clean setup. This is for a clean squeeze. This is a long setup. So we're looking for, I'm trading on the daily time frame. So a daily setup. If there's no squeeze, there's no trade. There have been a lot of tickers lately that I've been wanting to buy. It just didn't have a squeeze. Right. And of course, you can look for a lower time frame, but if I'm trading the daily, I want to stay focused on the daily. Okay. You're looking for stacked positive EMAs. So 8 is above the 21, above the 34, above the 55, above the 89. You can use the 200 if you want. You can go 5, 8, 13. You can go 10, 20, 50. The idea is that we're following the trend, right? We're looking for a stock that's trading above its 34 EMA. I like to buy around the 21. We're looking for bullish momentum. So the histogram is above 0. If you're using the Squeeze Pro signals, then you'd have a buy arrow there. If you're using the Big Three by Taylor Horton of Simpler Trading, you want to make sure that you've got the buy arrows there. These are all additional products. There's no benefit for me if you get them or if you don't. I have them. I find them useful. You can do the same stuff. You can find free versions. There is a free version of the Squeeze Pro signals. I think it's by Mackett as well. lots of free stuff on TradingView, on Thinkorswim. You know, if you want to pay for it, pay for it. You know, if you find it useful, great. If not, you can still trade without it. I also like to buy Delta 70 calls. I'm looking for 30 to 45 days to expiry when the price is around the 21 EMA. And then I start looking to take profits at +2 and +3 ATR, right? You guys know this. And so, one of the things that I also noticed from reviewing some of the trades that we took earlier in the year is I left a lot of money on the table. It happened to me with Mara. It happened to me with Riot. It happened to me with NVIDIA. It happened to me with IONQ. And so, I spoke with some of the other members. So shout out to them for their input as well. And I came to the finding that you can also use the 8 EMA as a trailing stop. Now, I found this. Other people have also discovered this in the past, so it's not the new discovery, right? It's not like the person who opens their window and sees the moon. You're not the first person to see the moon. You just, found it. But I found that if you're using the 8 EMA for a trailing stop, you might be able to stay in the trade longer, right? But this is something that you need to determine if it's going to work for you, if it's not. I've started putting together a presentation already. We're going to talk about the 8 EMA in more detail, because one of the things that I really want people to pay attention to is the direction of the 8 EMA, right? So just because something is stacked positive, right? If the 8 is above the 21, which is above the 34, above the 55, above the 89, stacked positive, right? If you're using the indicator that I've shown you, the stacked moving averages, you will see that they're like the background is shaded green. And so after speaking with Satish Vasu, so special shout out to you. Thank you very much for your help by putting this together. I've got something really cool to show you guys. And so let me go to my trading view. So here we'll just go to the SPY. And so we can see here that, background here is shaded red. So it means the EMAs are stacked negative. Here the EMAs are stacked positive. So that's good. But, there are times, and actually, you know what? Let me go to NVIDIA. There are actually times where you'll have a squeeze and you can tick all the boxes, right? Are we above the, is the 8 above the 21, above the 34, above the 55? But there are circumstances where, you might have all of the criteria met, but the trade doesn't work. And so again, back to using that 8 EMA, Mr. Vasu was kind enough to code it. So now, check this out. So now if the 8 EMA is turning in the opposite direction of the underlying trend, it's going to code it as yellow, right? So now we've got red for down, we've got green for up, and yellow is sort of just your caution, your warning sign that things have started to change, right? For me, a lot of the times I'll actually take the EMAs off. I just want to see what's going on with the background. If it's stacked positive and it's green, makes it a lot easier than me, zooming in and saying, oh, hey, well, is this going up or is this going down? But here we can kind of get an early warning, right? So if we look at, the daily, for example, there are times where, right now we don't have a squeeze on this. We have a squeeze on the 195. So we can see here that, hey, this is moving lower. And so maybe this is now changing direction, because remember, the shorter time frames will feed into the longer time frames. But if this is changing direction and this 8 is going to cross the 21, we're setting up for a potential short. And so, before, it used to be like, well, hey, momentum is above 0. Sure, momentum is declining, but it's still above 0. We can tick that box. But if the 8 is pointing down, I want no part of it. I do not want to be going long if the 8 is pointing down, because what happens when we get that 821 crossover? Now we don't have a clean setup anymore. Anything that's not a textbook clean setup is a potential short. Right? So watch out for that. That will be coming out in the near future. I'm not sure when, but soon. So now let's talk a little bit about spreads. I don't want to go for too long because I'm putting together some more detailed presentations. This is just kind of a brief overview. So remember, when we're trading options, we are aggressive directional traders. So as a directional options trader, you have to be right not only in terms of direction, but also distance and time, right? One of the worst parts of trading is you're right in terms of direction, but maybe you didn't buy yourself enough time. Or maybe it made a move, right? The squeeze fired short instead of firing long, and you took a loss on that trade. All we're trying to do is put the probabilities in our favor. If you know that this works 70% of the time, that's great. But it's what happens during that 30% when it doesn't work that's really going to determine how you survive in this market, right? It's not what you make, it's what you keep. You could be right 1 out of 10 times and make a career out of trading if you're really right and if you control your losses. Some of the best traders out there, I'm talking like hedge fund guys, I'm talking, Citadel, Goldman Sachs, some of them win 30, 40% of the time. Nobody ever wins 100% of the time except the ones who are lying or, paper traders or, professional photoshoppers. Nobody wins 100% of the time. Nobody. Right? So when you're trading spreads, the beauty of trading spreads is that you're still able to take advantage of directional moves, but depending on how you structure your trade, you don't necessarily have to be right all the time. In fact, with some strategies, the trade can actually go against you, but you can still end up making money. Okay. So what are some of the basic mechanics of spreads? What we know is that we've got long calls, because, we think the price is going to go up. We've got a short call, which means in this case, we want the price to do what? If you're short a call, you're hoping the price goes down. If you're long a put, you want the price to go down. If you're short a put, you want the price to go up, right? And unfortunately, I didn't get any graphics or anything, but I will point you in the right direction. Don't worry. So all of these strategies, right, when it comes to spreads, are all based on these, right? These four. It's a spelling mistake, sorry. And so by combining them in different combinations, you can create different risk and reward profiles. So what I suggest before you go out and start getting all trigger happy trading spreads, go to optionstrat.com. Okay, this is the OptionStrat website. Shout out to Cyril, you did a phenomenal job with this website. If I'm looking to build a trade or examine a trade, analyze it, this is the best platform that I have found. Okay. So, you can go there, you can learn about all the different types of strategies. It will give you an actual breakdown, so you can see a long call is bullish, there's unlimited profit potential, there's unlimited loss. You can see that there's, the payoff diagram, and it gives you a little bit of an explanation, right? What is the trade for? And so from there, right, hopefully once you've got the basics of long calls and long puts, you can start putting these things together, right? So what we're looking at are debit spreads here. So what's a debit spread? You are long and you are short. You don't really want to get too in-depth into things like, jade lizards and, strips and straps and guts and all these other kinds of things. Keep it simple, right? I have found over time the best setups are the ones that I simplify. Okay. Sure, you can do a butterfly and you can get, great returns. You can do this, you can do that, ratio back spreads and, inverse iron condors and all this other stuff. Really, at the end of the day, you have to ask yourself some simple, basic questions, right? What are you looking for? What is your objective? How bullish are you? How confident are you? And always ask yourself, what if you're wrong? Okay. So debit spreads are good for a few reasons. You can get a higher percentage return, up to a certain point, because if you're long a call and you're short a further out call, the difference is the max profit, right? The max that the spread can be worth. So if you've got a $10 wide spread, your spread cannot be worth more than $10, right? In theory. It'll max out at $10 if it's $10 wide. So if you buy it for $5 and it goes to 10, fantastic. But if it goes past your short strike, you're capping your profits, right? So you are limited in some regards. However, you can get some pretty decent returns because you can put less money into the trade, right? So you can participate in higher dollar stock moves without risking so much capital, right? So think about trading, Nvidia and Tesla and, these other stocks that are hundreds of dollars a share. And you can even use spreads to reduce the cost of a further out position. It's called a diagonal. And I'll go into all of these in future sessions. Next, we have credit spreads, okay? Credit spreads, I know this is the reason why we're doing the presentation. People want to know what credit spreads are, right? Because, and I'll talk about that here in just a second. But credit spreads are really a slow and steady way to trade. It gives you a lot of flexibility. They're very forgiving, right? With, directional trades, if I go long Nvidia, and if it doesn't, get past my break-even point at expiry or even before that, I can end up taking a loss, right? You have to be right in terms of direction, distance, and time. With credit spreads, you can actually be partially wrong and still potentially make money, right? So if we're selling lower deltas, delta 10, delta 15, delta 20, generally, anything under, you want to definitely, at least in my opinion, keep it under like delta 25. Even that's getting kind of risky. Delta 15, delta 20 is kind of okay. When you're selling these lower deltas, you have a higher probability of success. Just how if you buy in the money calls versus out of the money calls, you have a higher probability of success, right? Now, as long as the price stays away from your danger zone, you should be okay. But I have to caution you, you want to be careful because with credit spreads, you can actually lose more than the credit you received, depending on how you've structured it, right? So what do I mean by the danger zone? So let me actually go back to option strat. And so here I'll build first the bull call spread, right? So let's look at SPX. So let's say that we're bullish for, I don't know, December 15th, and we think that it's going to go higher. So here we've got a 10-point wide spread. So SPX 45.50, and we've got SPX. So we're long the 45.50 call, we're short the 45.60 call. If we are above 45.60 at expiry, our max profit would be $425. If we're completely wrong and it's under at that point, then our max loss is $575. So you can see that you can get some pretty favorable risk to reward parameters. Now, when you are doing credit spreads, it's the same idea, except it's not where we want prices to go. It's where essentially we want the price to stay above, right? So with the directional spread, you have to be right, and it's got to go above where you think it's going to go, right? In order to fully max out your profit on a debit spread, it has to be above your short strike. With the credit spread, it just has to be above where you thought it wasn't going to go below. So the danger zone is basically anywhere. So, I'll give you an example of a trade that, as an example. So right now the SPX is at 45.50. The expiry for tomorrow, if we do something like and this is just hypothetical, don't go put this trade on after watching this. We can do like a $5 wide spread, right? So essentially what we would be doing here is we would be short the 45.20. We would be long the 45.15 as protection. So in theory, Our max profit would be the credit that we received, which is $52.50. It would take $500 in margin. Sorry, give me a sec. Sorry about that. Excuse me. So our margin would be $500 because that's the max between the two spreads. And so the max loss that we can take on this trade would be $447.50. So you might ask yourself, why on earth would I risk $447.50 to make $52.10? That seems counterintuitive, right? Well, here's the thing. As long as price stays above this short call, you're making the max profit. Now, SPX is cash settled. You've got the 60-40 tax advantages when it comes to capital gains. So 60% is long-term, 40% is short-term. And it's more favorable in terms of liquidity and spreads than something like trading SPY, for example. So a lot of professionals that I know do trade SPX or NDX or anything like that. But the whole idea, and I think what people were really asking is, how do we structure these trades? And so when you're doing credit spreads, especially if you're bullish. So if you're bullish, you're doing a bull put spread. So you want the price to stay above this price here. You really want to just look at the chart. And so, let me go to SPX here just as an example. And so if we're looking at the daily and we said, what, 45.25? So basically here. So as long as SPX stays above this level here at the close tomorrow, you would max out on that spread. Now, I don't recommend waiting all the way until the end of the day. If you can get, and I'll give you an example of how I would potentially trade this. Now, I'm not saying go out and do this, but if you've got $5,000 in available margin, right? And you took 10 contracts, so your max loss, keep in mind, always look down first. Your max loss here would be 44.75. So if the market gets smoked tomorrow, you can lose up to 44.75. But as long as the market stays stays above, basically we'll call it 45.20. So if I go back to my chart here, 45.20 is here. And I will just edit that here. So 45.20. As long as SPX stays above here at expiry, you keep the full credit. However, keep in mind that time decay would really be eating away at this, right? So if you put this trade on, say, in the morning, and you can make 50% of that by, say, lunchtime, especially if the market goes higher tomorrow, there's absolutely nothing wrong with that. You would essentially be making, $250 or so per spread. Now, keep in mind, it is risky. You're risking a lot to make a little, but you have a much higher probability of success because you've got those way out of the money deltas. And you can, we're not going to get into the mechanics of how the Greeks operate. Most of you should already know that time decay, if you're long, works against you, but if you're short, it works in your favor. So as long as time is passing, if the market does absolutely nothing, right? Like look at the last couple of days. We've had some pretty low volatility. Today we had a little bit of volatility with a high of what, 45.87 and a low of 45.47. So a 40-point range. But, we stayed above. And so if you would have done this trade hypothetically this morning, you would have cashed out full profit. Now, it looks great on paper, right? If it stays away from your danger zone, you're fine, but be careful. You can lose more than the credit you received. And that's what I really want people to be cautious about. Everybody asks, oh, well, how much can I make? What I'm going to do is flip that question on you. I'm going to say, why don't you start by always asking yourself how much you can lose instead, right? Do you want to be right? Do you want to make money? You have to accept that trading things like credit spreads, it's a slow and steady way to trade, right? Some people look at the delta of 15 as it basically having a 50%, a 15% chance of being in the money, which means there's an 85% chance that it's not going to be in the money. Some people look at it that way. You can use it as, a gauge of probability, but keep in mind, you can build your account pretty consistently if you're willing to be patient. The reality of it is most traders and people are simply not patient, right? If you want to trade credit spreads, you have to be very disciplined. You can't be emotional, right? You have to be willing to wait. And that's the hardest part, right? Charlie Munger, rest in peace. He died yesterday. Or was it today? I think it was yesterday. Yeah. He said the money's not made in the buying and the selling, it's made in the waiting, right? Trading credit spreads, low dollar amounts, right? Unless you're trading size. Like John Carter right now, he's putting on sometimes he'll be using more than $1 million in margin. Sometimes he can make 6 figures in a day selling premium. But he's got, $10 million plus count. If you understand compounding and you understand consistency and you have rules in place and you're not just, trying to approach this as a get rich quick profession, trading credit spreads is a very slow and steady way, right? In the beginning, maybe you're trading one spread. Maybe you're making 20 bucks, still 20 bucks that you didn't have. And then gradually you start building up to the point where, you can start making a few $100s a day, to the point where you can maybe even start making a few $1,000s a day as your portfolio grows. But remember, your discipline also has to grow, right? I find that most traders just haven't matured enough as traders to realize that it's not get rich quick, right? It also means that they still have that gambler's mentality. And if you keep a gambler's mentality, sure, you might win, right? How many trades does it take you to go from $1 to $1 million if you make 100% each time? But can you do that, right? Be careful what you see out there. Remember, consistency is key. So some of the group members have been asking about this great success that one of our members has been having with SPX. So I want to give a shout out to Sam. He couldn't be here tonight. I have reached out to him and I will be doing an interview with him with the details on how he trades his SPX trades. You've seen his results. He's been posting screenshots in the group. I really have to give him a shout out because I worked with him earlier in the year and he found what works best for him based on his schedule. But I also have to point out that he's been super focused. He's been super disciplined, right? He's got all of his rules written out. He knows exactly, what his entry is, what his exit is, how much he's willing to risk, what his stop is. And he's been following his rules and has been, paying off. It's been paying off for him. He told me about a withdrawal that he just made today, and I was just ecstatic for him, right? And so congratulations, Sam. Way to go. Keep up the great work. And I will be doing an interview with him in the near future to have him explain exactly what he does, right? Because he does a 0 DTE. He also does an 11 DTE. And he's got some rules that he's got in place. And I don't want to take away from him. I'd rather you hear it from him directly. But it's basically, the same idea. You're wanting the price to stay above where you've sold your put credit spread. And you can do it on the opposite side. You can do a call credit spread if you think the market's going to go down. But keep in mind that, you want to be you want to be sort of in the right place at the wrong time, or I guess at credit spreads, you just don't want to be in the wrong place at the wrong time. So congratulations to him. Hopefully we'll get that interview set up in the next few weeks. And so I also have to shout out a few members as well. They've really been putting in the work. I've worked with all of these individuals personally. And I really want you guys to know how proud I am of you and the progress that you've made, right? So T. Rashid, Brandon, Putbull, Bell, seen a lot of progress from these traders. Danny, thank you for your input. You and I, we discussed the 8 EMA and, you're always back testing stuff. So I do really appreciate your contribution as well. Satish Vasu, thank you for your help with the indicator. I really have to shout him out because I told him, hey, this is the idea that I have. And he just went and coded it for me. And he's like, here you go. Right. So thank you so much. Really appreciate it. When I show you guys all of the stuff that he's put in that. So right now, we use the stacked moving averages, we use the Keltner channels, and then we've got, the TTM Squeeze, we've got the coded background. So he's actually combined a lot of those indicators. For those of you that don't have, like the Pro Plus, and you're limited to the number of indicators that you can use on TradingView, Mr. Vasu was kind enough to put that together, and it's all under one indicator. And hopefully, when he's got some time in the future, if he doesn't mind, he'll be able to add to that as well. And Cinemaxon, special thank you to you for all of your help. He helped me set up the Discord. He's been instrumental in, just helping me being able to provide value to members in the group. So thank you very much to all of you. Really impressed with all of your progress. And, they all have things in common. Disciplined, they learned how to fix their mistakes. They're tracking their trades. They're not over trading. I remember working with one person in particular, who used to take 20, 30, 40 trades a day. And since they've, found a better way that works for them, they've been seeing, some really good success. So all of them, who I've mentioned here, have been, showing a lot of progress. And so I just absolutely had to make sure that I let you guys know that, I see you and I'm proud of you. Keep up the great work. And for those of you that aren't on the list, hopefully someday you will be on the list. Like, I mean, if I can do it, you can do it. Right? It's not rocket science. It's more psychological than anything else, right? And if you want to be successful, you have to put in the work. These individuals have been doing that. So I had to make sure that I shouted them out. And so realize that trading is a marathon. It's not a sprint. You're not going to be a millionaire on your next trade. You might be, and if you are, congratulations. But keep in mind that there's always another trade. You can't take every single trade out there, right? Remember that proper planning prevents poor performance. As long as you've got a repeatable process, you can have predictable outcomes, right? You guys hear me say this over and over again. And I'm not saying it because, I want to nag you. I'm saying it because it's also a reminder to myself, first and foremost, right? And if you treat it like a hobby, it will pay you like a hobby. And most of our hobbies cost us money, right? If you treat it like a business, it can pay you like a business. It could be profitable. But you have to have a trading plan. You have to have rules. You have to use your rules, right? You have to track your trades, plan your trade before you get into it, right? When I get into a trade, everybody knows what my setup looks like, right? Where was it, right? So like, here's an example, right? I've got 5 lines on the chart. I've always got it, right? Where is it? I think I took IO and Q today, right? So here you go. What's my strike price? What's my entry? What's my stop loss? What's my profit target? My expiry should be, yeah, there it is. It was off the screen, right? So you can see I gave myself lots of time. This isn't an A+ setup, as I mentioned in the group today, but we do have a squeeze, and I love this ticker. And this was a big, I took this back here. So I took it here, I sold it here, and then I watched it just continue onwards, right? So, it's the same thing over and over again. You talk to any trader who's been doing it for a long time, they're doing the same thing over and over again, right? If you work for a company and you want to know how much they spent on office supplies, if you go to somebody in the accounting department, they've probably got a line item that says, you know what, we spent $372 on paper clips last quarter. But if I ask people about their trades, it's like, well, I don't know. Well, where'd you get in? Why'd you get in? Why'd you get out? Right? And you're never going to be a perfect trader. You need to understand that. Shout out to Mike Noss. He told me about a book called Golf is Not a Game of Perfect. And if you read that and you just replace golf with trading, you realize that, all you can do is the best that you can do, right? So if you eliminate the mistakes and you just focus on doing the right things long enough consistently over 10, 20, 30, 50, 1,000 trades, you can build a career out of it. Okay. Don't make it overly complicated. Don't make it overly difficult, right? Do it. There's no right way to trade, but there's a lot of wrong ways to trade. Okay. So make sure that you know everything beforehand, right? I always plan out my trades. I know why I'm getting in. I know what my target is. And I just follow the plan, right? Sure, I've left all kinds of money on the table. But when I go back and I review it, it was still a 5 out of 5 trade, right? I left tens of thousands of dollars on the table with, Mara and IONQ and Riot, NVIDIA. But you know what? When I reviewed those trades, they were 5 out of 5. When I got into the trade, this was my target. It met my target. I took the trade off. Rinse and repeat, right? And, I guess also refine if you can. I was mentioning earlier, right? I've got this. I'm looking at it right now. The market doesn't give a damn what you think. I have it there to remind myself that the market is always right. Okay. And so keep in mind, there's approximately 250 trading days in a year. If you make 10 bucks a day, that's an extra 2,500 bucks, right? That's a flight somewhere. $50 a day, $100 a day, right? If you're making 100 bucks a day, that's an extra 25 grand a year. I was reading like the average person in the US makes like $40,000 a year. If you make 200 bucks a day, you're making more than the average American, right? When you start getting into the thousands of dollars a day, like, now you're talking like real money. And if you've got a career that pays well and you enjoy it, don't let anybody, talk you into or talk you down and say, well, you should just be a full-time trader. I've been a full-time trader. It sucks. I didn't like it. It's stressful. If you have multiple streams of income, it takes the edge off. It takes pressure off, right? Most people who want to be full-time traders just hate their jobs. And when you start finding some trading success, all of a sudden your job isn't so bad. And when you get to the point where you know that you can do this full time, you'll realize that the job that you have is just another stream of income, right? Some of our members love what they do. I've got a career, a couple of other people have a career. Not everybody wants to be a full-time trader. But if you do, you can, right? Always do what's best for you and your family and, your account, and forget what everybody else says, okay? At the end of the day, what matters is you and what's best for you, right? So when you're seeing, crazy returns on FinTwit, ask yourself how accurate it is, right? Because if you start compounding even 1% a day, you can go from $1,000 to 100 million in a few years if you're consistent at 1% per day. Now, of course, you're going to get to the point where you just can't put on that kind of size. But, for the purposes of the illustration, right here, 1% a day, 232 days, you can 10x your account. In 463 days, so just over a year and a bit, you can go from from $1,000 to 100,000. If you make 1% a day, you are like in the upper echelons of traders. Warren Buffett averages 22% a year. Jim Simons, founder of Renaissance Technology, was a mathematician for like NASA or like the CIA or something. I don't know. I think it was NASA. Anyways, he's averaged like 63% a year. Like he's the quant guy, right? Like, he's used math to solve the market. So if you can average a few percent per month, Remember, when you've got a smaller account, it's a lot easier to get these outsized returns. If you can return, 20%, 15% on hundreds of millions or billions of dollars, like you're damn good. Okay. And if you can compound 1% a day from $1,000, 1,158 days to get you to 100 million. Now, obviously, you're not going to do 1% every single day. But even if you do 1% a month and you compound that, over 12% a year, and you compound that over 5, 10, 15, 20, 30 years, you're talking about a lot of money. Okay. So, in conclusion, believe in yourself and that you can be successful. Trading is one of the hardest things to do because it's you versus you, but also you versus the market. And the market doesn't give a damn what you think, and the market is always right. Okay. I coached the lady years ago who trained as a medical doctor, and she said becoming a full-time trader was more difficult than med school. So surround yourself with people who genuinely want you to succeed and who are willing to teach. But remember that you have to be teachable. I've been in this game for years and I'm still learning. I'm always looking to refine my edge, to add a new tool to my toolbox, right? And if you think you can or you think you can't, either way, you're right. So that's it for tonight's presentation. I do hope that you guys found value in it. If you have any questions, feel free to drop them into the Discord. And we'll be doing more presentations. I'm going to have an interview with Sam. We'll talk about his SPX and how he trades his put credit spreads. And then I'll also be doing a more in-depth presentation on the 8 EMA and how we're going to be, or how I've been, I should say, using that as a guide to either stay out of trades, get into trades early, which, is a little bit more advanced, but also, how to use it as a trailing stop. So that's it for me. Take care, everyone. I wish you all peace and blessings. Be safe out there. Take care of yourselves and your families. God bless. Bye for now.